Okay, so welcome everyone. The topic that we are going to talk about today is called the Pinbar trading strategy. I have found that this is a really simple setup to identify. I use it all the time. It works out really well. So it's a high probability trade setup. It's a reversal pattern. So it's really nice, especially if you're looking for it at support and resistance areas. It plays out really well. So let's dive into it. Just a quick disclaimer, actually, before we get into this, that this is for educational purposes only. If you have questions about your own individual investment needs, I recommend you talk to your investment advisor. All right, so let's get into this. So in this webinar, we'll take a look at, first of all, what are pin bars? How do we identify the pin bars? And then we'll look at how to use this pin bar strategy in an effective way so that we are making profits from our forex trading. We'll also take a look at how to enter the trade, where to place our stop loss and profit targets, and all of that good stuff. So this is what we call pin bars. Pin bars have this type of a shape. It's a single candlestick pattern. So this one here is a bullish pin bar. This is a bearish pin bar. And this is just a quick overview. We'll dive deeper into what these candlesticks mean in just a second here. So pin bar is a reversal candlestick pattern. It's a single candlestick reversal pattern. And generally what we are looking for in pin bar is a long wick up top, big long tail, and a very, very short body. So this here is a bearish pin bar because it closes out black or red. If you use the red and green charts, this body will look like a red candlestick close. And this is a bullish pin bar. So you have a long a long tail in the bottom and a very small body on top. And this will, if you're using red and green charts, this will be a green body. So basically the price pushes all the way up and closes in the positive. The tail usually is about 2 to 3 times the size of the body. So you want to make sure that it does have a long tail. And that's the very important thing about a pin bar, a long tail, which represents that the price is rejecting at that level and that we are likely to see the price move in the opposite direction of the wick right over here. So here in terms of looking at individual bars here, we have, this is the tail that we just talked about. So it's also called the wick. So whichever way you want to call it, it's the same thing. So a long tail or a wick, and then you have a small body. In this case, the price started here and closed up here. So this gives us a bullish pin bar. And then this one is a bearish pin bar. So you have a long tail up top in a bearish pin bar and a small body at the bottom. And this will be your red candle or the black candle if you have black candles. So a little bit more detail about the bullish pin bar here again. So at one point, this candle would have looked very, very red. And I generally like to trade these from a 1 hour time frame. You can trade them from any time frame, but just know that when you're trading this from a higher time frame, the number of pips that you would have in a trade are going to be more than if you trade it on a 5-minute chart. You can trade it on a 5-minute chart, but just know that your targets are going to be much smaller compared to a 1 hour, 4 hour, or a daily chart. So here we have a bullish pin bar. So in this case, at one point, the candle looked really, really red, but then buyers stepped in and pushed this candle all the way up. So the price got pushed up all the way to the top. So this is where the price opened. At one point, it was really, really red, looked really bearish, and then buyers stepped in and pushed it all the way up so that it closed up here. So this is how we get this rejection. So this long tail shows rejection. Price was trying to push lower, but then buyers stepped in and pushed the price higher. So when buyers step in at key support and resistance level, generally that means that price may go in the opposite direction, and especially when you have this long tail like this. So think of this as a force coming in and pushing the price down, and then on the other hand, you have somebody else pushing it from the other side, and they actually manage to close higher. So it's like a tug of war. So when one party closes, moves into the other one's area, that means the game is over. And this is exactly what we see here. Buyers stepped in, pushed it all the way to close higher, and that gives it a very, very bullish bias for this. That means price will now start going higher. And in terms of the bullish pin bar, we tend to see that at the bottom of a trend. So for example, let me grab my pen here. So what you'll generally notice is price will be coming down here like this, and then you get one of these candles. And then generally you may see a pullback, and then price will start going higher. So this is what you're looking for. It will be a trend to the downside, so price will be moving down nicely like this, and then you see a big pin bar over here, and then price will start moving higher. So this is the general market characteristics that you will see around the pin bars. So they're always, the bullish pin bars are formed at the bottom of the trend. And here's our bearish pin bars. In terms of the bearish pin bar, we have a long tail to the upside. So price at one point was pushing up higher. So this candle looked very, very green and very bullish at one point, but then it came to a key support and resistance area. Sellers stepped in and pushed the price all the way down here. So in this case, price opened here. At one point, it was looking very, very bullish, and then sellers came in and price closed at the bottom here. So it looked bearish. It closed in a very bearish way. So bearish pin bars are generally found at the top of an uptrend. So you'll have price going like this, and then buyers will try to push the price higher still, but then they get rejected. Price gets rejected. We get a pin bar here, and then price will slowly start to come back lower. So this is what the general market looks like when you have a pin bar. So let's draw it out here. So you'll have price moving up higher like this. You get a pin bar right here, and then price will start to move lower. So this is our normal market. So if you like pictures, this is what it looks like in terms of the pictures. And we'll take a look at the charts to really see what it looks like on the chart. But this is what you're looking for on your charts. So in terms of entries, now how do we actually trade these pin bars? Once we recognize them, what are we looking for? In terms of our entries, we are looking for, first of all, pin bar to close. So it's very important that pin bar closes, because if it looks like a pin bar, things can still change within last 5 minutes of the candle close, for example. So my favorite chart to trade this from is the 1 hour chart. And like I mentioned before, you can trade them from higher time frame. And I have done that in the past, especially on a daily chart. If it rejects, that's a good time to trade. However, 1 hour time frame will give you the intraday trade here as well. So once you recognize, let's say, the bullish pin bar here, we are looking for a candle to close. So make sure it closes, because things can change drastically in the 5 minutes, like I mentioned. So wait for this to close. Then your entry will be, if you're sitting at your desk looking for a trade, the entry here I would look for would be at the close of this candle. Or another way to trade this is you can look for a pullback. A lot of times we will get pullback on these candles. So at some point price will come back lower here and then move up higher. So you could also have a limit order, long limit order here at about 50% retracement level. So you're just looking for a 50% pullback, and then you're looking to go long in this trade. So bullish pin bar, we are looking to go up. We are looking to go long, and our stop loss would be below the pin. Make sure you give it some room, because price could come all the way low down here and try to fake us out. So make sure you put your stop loss below the pin here, give it some pips, some room to breathe, and then we're looking for price to go up higher. So that's our bullish pin bar entry. In terms of a bearish pin bar, we are looking for this candle to close. At one point, it will look green, and we were not going to do anything at that point. Once the price rejects, closes into a red candle or a black candle in this instance, if you're using black and white charts, then it's time to enter the trade. So wait for the candle to close. Then if you're using market orders, you can just use at the close of this candle, or you can wait for a 50% retracement and have either your limit order or market order up there. So you get, if you're using 50% retracement, and we generally get that, you will just, your stop will be smaller. So instead of going from here to here for your stop loss is about half the size. So that's the benefit of using 50% retracement pullback entry as opposed to the entry right at the bottom, but it's up to you. A lot of times the retracement do happen, sometimes they don't. So if you're using, if you're waiting for 50% retracement, you may not always get into the trade. However, it does give you more pips because your stop loss is so small and you get all of these extra pips as a profit. Either way, it's, whichever one you choose, don't worry too much about it. Just make sure your stop loss goes above the pin here so you have some room to breathe in your trade. So let's take a look at an example on our chart. We're looking at Euro US dollar 1 hour chart. So as you can see, like I said, the pin bars tend to happen at the top of an uptrend. So this is a bearish pin bar. It shows that the price is likely to reverse now. That's what the bearish pin bar is, a reversal candlestick pattern. So this is our key support and resistance area. If you trade pivot points, this is a really nice pivot point trade as well. This is an R2, but don't worry about it if you don't trade pivot points. This is just your support and resistance area here. As you can see, price tries to go through, pulls back, tries to go through again, and then finally gives us a nice pin bar. So this here shows that the price is fighting with this price point. It's not able to close above, especially when we get a pin bar. Pin bars are also stop hunt signals. A lot of times you may have heard about brokers running stops or things like that. These are, they can also be seen as stop hunts where broker or somebody has tried to push the price up higher, taken out all the stops that were here in the first place and then closed lower. So once the candle closes, this is a good opportunity to enter. So in this case, we got a slight pullback. We didn't get a big pullback. So like I said, you can either wait for the pullback or just take an entry here. So here you get into your trade here. Your stop loss goes here where the yellow line is above the high, above the pin bar here, and you're looking to short. So we enter a short trade and we keep we stay here till we see some sort of a reversal signal. As you can see here, nice long red candles. We are not seeing a lot of green candles at this point. And now once we get here, the green candle engulfs the red candle, so you could just get out of your trade. But if you look from support resistance area here as well, this is your support area here. And price is now starting to pull back up here. So this is a good place to exit your trade. You can, so in terms of the exit, you can either exit at the next important support and resistance level, or if you're watching the chart, just wait for price to show you reversal signs and then get out of the trade. So those are the two ways to exit the trade. Entry will always be after the close, but in terms of exiting the trade, you can just move your stop loss with you, and once you start seeing that the market is starting to pull back, you can get out of the trade. So in this case, we have about 96 pips in the trade, which if you're trading one standard lot would equate to about $960. So as you can see, this is a really nice trade setup that pays well. Okay, so let's revisit the entry criteria once again. What did we talk about here? So you're looking at a 60-minute or a higher time frame. That's my favorite time frame to trade this from. However, test it back. Feel free to test it on different time frames and see what kind of results you get. What I have noticed is that the smaller the time frame, so if you're trading it from a 5-minute or a 15-minute time frame, or even a 30-minute time frame, your targets will be slightly smaller. So you're not looking for 100 pips in a trade, for example. You may just be looking for 40, 50 pips. The higher the time frame, the larger the potential profit in the trade. Of course, anything can happen. Market conditions can change, and Hence, our trade can go wherever, so we may not always get to the target. So that's why it's important to see if the price starts to reverse, we start seeing large green candles, then we would exit that trade. But in general terms, we are looking for a 60-minute time frame, so which is your 1-hour chart. You would mark your support and resistance levels. So if your support and resistance level is coming from, let's say, a 4-hour chart or a 1-hour or daily chart, those are really important support and resistance levels, and we generally see that price will respect those levels before it goes through, or it may just reverse at those levels. And then you're looking for a pin bar to form. So you're looking for that nice long candle. If it was an uptrend, for example, you're looking for price to give you a nice pin bar here like this. That's when you get the pin bar, you're looking for an entry on the close of the pin bar. Right, so you're looking for a pin bar to form at an important support and resistance level, and then you're looking for entry on the close of the pin bar. And once that happens, your stop goes up top. So our stop would be above the pin here on the other side of your support and resistance, so that there is room for trade to breathe, and you enter a short entry here. So in terms of your exit, you're looking for either a strong support and resistance area, or you just wait for a price to come down, and once it starts to go sideways or starts giving pullback, you can exit the trade. So that's how you would trade this particular type of trade setup. So let's take a look at some more examples here. So here we have bearish pin bar. As you can see, like I mentioned before, these generally tend to form at the top of an uptrend. So once price gets into an important support and resistance level, in this case 69.50, it's a 50 level. They are your normal support and resistance levels here as well. This is New Zealand US dollar 1-hour chart. So we get a nice pin bar here. Our entry can be right at the bottom of the pin bar, or like I mentioned, you can wait for 50% pullback. In this case, we do get that 50% pullback that we tend to see. Stop loss would go above the pin on the other side of your support and resistance line, right over there, and you're looking for price to just come back lower. So you're looking for the next important support and resistance area that you can see, and you can either put your exit somewhere in here at the next support and resistance area, or if you're just watching the trade, just now we have a bit of a pin bar on the other side, and here, as you can see, you can even exit the trade after this big green candle, because chances are price is going to go in the opposite direction once we start getting huge green candles. See here, all we saw was red. So we entered our trade and then just kind of chopped around for a little bit, which we expected because we do have support and resistance here. And then, but it never went to our stop. So we just stay in the trade till we get to our exit because of support and resistance right here, or we can just wait for it to give us start showing pins in the bottom, or at the bottom, sorry, at the close of this candle, because that's a nice bullish candle, time to exit the trade. So Daniel has a question, do I look at volume on when these pin bars? I tend to look at volume for everything. So it doesn't matter what kind of trade setup it is. If you're in a trade and the volume confirms that the trade is, we are seeing more, in this case, bearish volume come into the market, that's usually a good sign, because that just confirms your level. But in terms of the in terms of the pin bars, you can trade them without looking at the volume, or in my experience, I have found that I can trade them without looking at the volume, and then generally the volume will kind of follow the pin bar, so volume will start to shift. But in terms of just the volume here and other things like that, I like to use confluence. So if you have more things coming together, it gives you a higher probability trade. So for example, if you have support and resistance, you've got your pin bar, you have a pivot point, or you have volume, or your RSI is showing that market's about to turn, any of those things, whatever you use, it's fine. It's good. The more confluence coming together, the higher the probability that the trade will work out in your favor. So whatever else you're using, if you see pin bar set up with that, the more the merrier. So confluence is a great thing when trading. It just makes your trades more likely to work out in your favor. So here's another example. This is also New Zealand US dollar 1-hour chart. Here we are looking at a bullish pin bar. See, this is our support and resistance right here, and price comes and does a bit of a double bottom here, the wider double bottom, and starts to move up here. And then price pulls back into this level here, right into this support and resistance, and gives us a nice pin bar here. And sometimes the pin bar can look slightly different. Sometimes they look like this, other times they can look like this. Sometimes they can look like that. So so you have to go back on a chart and just play around with it and see which ones you can recognize. See, sometimes there's another pin bar right here. So there are a lot of pin bars that come in different shapes and sizes. So that's why just making sure that they are at a important support and resistance area here. So as you can see, price closes up higher. It's not able to get below the 6,800 level, pushes up higher and closes like this, and then you get your engulfing candle. So even before the engulfing candle, again, as you can see price is pulling back 50%, or you can just enter your trade at the top of the pin bar here once the pin body closes. So important thing to remember here is long wick, small body, right? And then you go long in this trade. Stop loss goes below the pin bar here. And if you wanted to be even more conservative, you can even put your stop all the way at the bottom here. It's just that then you're looking at a really wide stop loss. So the closer one, the more conservative one, the closer one will be right over here, just underneath the pin bar, with some room for the trade to breathe. And then you're going long, and you just stay in the trade. As you can see, the price is moving higher. It's into the support and resistance, but it's holding above the pin. So you just stay in the trade till that happens. And now we get a very long pin up top. Anytime you see these long pins, it usually shows rejection of price, right? So in this example, price did continue on higher. However, generally, we wouldn't know that the price will go higher or lower. Once you start to see these pin bars, big pins, it just means that price may reject at that level. It shows a rejection. It shows that sellers are starting to step in. And so this would be a good time to close out our trade. And in this particular trade, it's 102 pins from entry to exit. So that's a nice $1,000 profit if trading one standard lot. So as you can see, the 1-hour charts here are quite nice for these pin bars, and they give us nice profit in the trades. The question here is, what volume indicator do I use? I just use Hawkeye volume. There are tons of them. I just use Hawkeye, which just shows you when the volume is changing. Okay, let's take a look at yet another example here. We have dollar CAD 1-hour chart. So in this case, again, we are looking at a bearish pin bar. As you can see, price come to this level. I did not mark my support and resistance level, but here is the support and resistance. Price comes here, pulls back, comes to test the level again, pulls back, and then gives us a nice pin bar. Again, once the price has tested the level a couple of times and rejected it, and then we get a pin bar, that's a really nice setup. It just shows that twice the price rejected the level, and with the pin bar is the 3 times. So this is the 3-time rejection of the price level, which just puts the probabilities in our favor. Okay, so here, once the price pin bar closes, we could take our entry here. Stop loss, as always, will go above the pin. A little bit of room here for trade to breathe, and we we stay in the trade, and then as you can see, price starts to move. And we stay on with the trade till we start seeing this type of, see how price is going sideways now? Here, price is leaning downwards, is moving down, but now at the bottom here, the price starts to go sideways. It's just going sideways, not really doing anything. So you can just, somewhere in here, you can exit the trade. You can exit at the top if it looks like it's going to move up higher. But just in the sideways consolidation, because we don't want to see too much consolidation. Generally, you may see some consolidation at the beginning of a trade, but we do not want to see the consolidation at the bottom here, because we need to see more red candles, which would give us an indication the price is likely to continue. Once you start seeing a lot of green candles like this, that means market is not sure where the price is going. So it's a good time to exit the trade. This was a really nice trade. We had 340 pips, 348 pips in this trade. So that's a nice $3,480 in profit if trading one standard lot. In one standard lot, the one pip is equal to $10. So each pip that you get will be worth $10. So in this case, 348 will be worth $3,480. So the question is, once the trade starts to move in your direction, how do you add to your trade? So let's take a look. For example, this one here. Let's use this as an example. See how you have, this one would be hard to add to actually, because normally what I would look for is, let me see if I can draw with a steady hand here. Oh, okay. So normally what I would look for is, so if you take a look at this, this kind of looks like an M, right? So you normally would have a neckline at the bottom of the consolidation. Once the price breaks below the neckline, that's a good place to enter. So let me pick a different color to highlight this. Let's say blue because we don't have blue here. So this is our, so if there's no M, for example, look for your support and resistance level. See, here is our support and resistance level. So basically where the price is consolidating. So once you get a nice solid candle close below that line there, this is a good time to enter the price. But in this case, it looks like something came into the market, whether that was news or a comment or something came into the market and just pushed the price lower. So this one would be difficult to add to, but let's take a look at some other examples and I'll point out how to add to your position. Okay, so here is a recent one. This just, here, this is a Euro US dollar, sorry, daily chart. So like I mentioned before, the higher the time frame, the more room there is for the trade to play out in our favor. So here we have a pin bar. As you can see, price was moving up and then comes to an important support and resistance level here, 116.20 level, and then closes with a nice rejection at the top with a nice red candle close. So small body, long wick gives us our pin bar. And this is where you can just either wait for a bit of a pullback or you can just enter at the bottom of the pin bar close here. And as always, your stop loss would go above the pin, so give it a few pips, and then you enter the trade. It's a short trade, so you're looking to sell here. So as you can see here, you just the first target would be your important support and resistance area, which is right around here. But when you look at this candle, its close is very, very bearish, which means the price is likely to continue lower. So in this case, let's take a look at, sorry, let me talk about exit first. So once the price starts to go sideways, see, it's not moving any lower. We have red candle, pullback, red candle, pullback. So once price starts to do that, it just means the price is consolidating. So after this point, it can go in either direction. There's nothing saying that it will go up higher, but chances are it may go up higher, right? So we want to close our trade because at this point, we are just, it's just a churn. There's nothing really going on. So this is where we would exit the trade. So let's revisit how could you add to your position in this case. So you have a pin bar here, and then you see this nice candle close, this one here. So once you get a nice candle close like this, you can look for a pullback. If you have a pin bar above, generally you will get a pullback right here. So this here you could add, or you can add to your trade once this little pin bar closes right into here. So this would be a good place once the pin bar closes to add to your trade. And then see these pin bars right here. This could be another place to add to your trade. And once the price starts holding the level, you can add. So let me redraw that. So our first support and resistance level right here is this. See this candle close? If you look right over here to the left, this is the first support and resistance level. As the price breaks through this and starts to trade lower, this gives us an indication the price will move lower. So the next support and resistance area is right here. As price starts to trade lower, this gives us an indication the price will likely go lower. So these pins right here, once they close as pins, this is a potential place to add to the trade, and then you start to go move lower. So at this point now, this is an important support and resistance area, right, going right all the way to here. Excuse my wobbly drawing. It doesn't give me a straight drawing for some reason, so I'm just drawing with my little freehand freestyle pen here. So once the price starts going over here, so now the trade has moved quite a bit, right? So we cannot be adding any more because it could go lower for sure, but then it's already moved. So once price is so far away from your entry, it's not the best time to add to the position. Then you want to start looking for price to pull back or give you some other sort of entry. So that's in terms of adding, you could add here once the price starts trading lower here, or once the price breaks through this level. These pin bars are a good place to add, and not these ones, because then we are already far away from the entry. So that's not a good time to scale in. So you just stick with the trade, whatever lot size you have, and you let it run. And once the price starts consolidating, going sideways, time to exit the trade. And then any questions so far? Anything I could clarify? It is a nice and simple trade setup for sure. So just looking at the question here, if the pin bar is pushing up but still red, where it closes lower, is that an indecision pin bar? I'm not sure, Walter, if I totally understand that question. Oh, does the color matter in terms of the pin bar? If it's the red color and you're looking to go short, it just increases the odds of that working out. But in case, for example, but see over here, this is green, but it still plays out. Oops, sorry. But it still plays out. So it's not, it depends. Generally, I would say do some back testing. The higher probability trade will be when, let's say, if you're looking to go bearish and you get a red pin bar, that's a good sign that it will go in your direction. And if you're looking to go bullish, look for a bullish pin bar. However, I have seen pin bars work out even if it's a little bit green, or over here, for example, it's slightly green. It still tends to work out because the wick here shows rejection from important support and resistance level. So I would say just test it out. I look at what's going on in the market before I would trade it. But the best entries would be, if you're looking to go long, enter on a green or a bullish pin bar. When you're looking to go short, enter on a red or bearish pin bar, which just puts the odds in your favor. And in terms of what happens if the pin bar breaks the support and resistance level, for example, this one here, it broke the support and resistance level and then came back and closed lower here, which is great, right? It just puts the odds in our favor. It just shows us that the price is likely to go lower because it's rejecting the higher level. So a lot of times you see the price will break through the support and resistance level, it'll collect all the stops on the other side and then reverse. So there's nothing wrong with that. It's actually, the longer the wick, the more it tries to break through and close within our support and resistance area, the better it is, because it's cleared out the boards, all the trade stops on the other side. So it will push the price lower. So let's take a look at this one. This is pound US dollar 1 hour chart, and we're looking at a bullish pin bar. As you can see, price came to this level, pulled back from here, tried to break through and pulled back, giving us a nice morning star pattern here, and then came back and tried the same level third time. And that's why we need to give our stop some room to breathe. Actually, I would even put it behind this pin bar here just to give it some room, because price could come back and test lower again, right? So keep that in mind. So in this case, price does pull back a bit, but at the close of this candle, you can take your entry. Stop can go below the pin. But if you have a lower point here, I would even put it even underneath that, which does make the stop a little bit larger, but it does give you more of a conservative trade because excuse me, it gives you more room for your trade to breathe. So either way, its entry goes over here, stock can go at one of these levels, and we are looking to go long in this. So first thing to understand about this particular trade is that we are in a consolidation right here. Price has rejected this level 3 times now, so we need to get out of this consolidation. And as you can see, so we have to sit in this trade. That's what I was saying. Sometimes at the beginning of these trades, you may see the price go sideways and not do much. But once this trade starts to pick up, it will just do one of these, right? It just shoots up, and this is an inefficient move here as well. So generally our profit target will be at the beginning of where the price move actually started. So it will be in here. But as we can see, we start to get too many pins on this in this case, and this is a good time to exit the trade. You can either exit once you see this pin or once you get this engulfing candle. Either way, this is approximately where you would exit the trade. And from your entry to exit, we get about 133 pips, which is about $1,300 with one standard lot. So as you can see, a lot of these are on 1-hour charts. So 1-hour chart is a nice time frame to trade this from. So I would recommend testing it out on a 1-hour chart and just take a bunch of these entries and see where the price lands. But generally, I find that the 1-hour on a Pinbar is an excellent trade. All right, so let's move on now. So if you guys would like to learn more of these type of trading strategies, I recommend you go visit my website at tradingwithvenus.com/forex course. And in the course, you will learn some of the things that I talk about would be stuff like this. Pin bars, I focus on pin bars. I teach you this particular candlestick pattern, how to recognize it, and we'll look at a lot of other candlestick patterns as well. We talk about how to draw your support and resistance levels, how to recognize those, how to draw your trend lines, and of course reversal patterns. I always look for reversal patterns at key support and resistance areas. So I will talk a lot about the different reversal patterns that I'm looking for. We'll talk in one of the sessions there about moving averages. Fibonacci's are a good way to plan your trades. So we'll talk about how to use Fibonacci's to trade. And then of course my favorites, pivot points. That's one of the indicators that I do use. And I'll talk about how to use pivot points in your trading. Of course, we'll talk about fundamental analysis as well, because when we are trading, it's very important to pay attention to what news is coming out, what does that news mean, and how will it impact the market. And I recommend when you are trading, do not trade when there's red news, the major news coming out. It's better to just sit out and wait for it to blow over before you actually enter the trade. We'll talk about risk management and equity and trade management, and you will also receive my pivot point indicator as a bonus. So the cost of this course is $497, and you can go sign up at tradingwithvenus.com/forex course. Any questions? This brings us to the end of our presentation here. So there's a question about Hawkeye volume. Hawkeye volume, it's an indicator that you do pay for. I paid for it. I think I may have a link on my website under resources page to go purchase that. I think it's $99. I just got their starter thing. They have a ton of other indicators, but I only use just the bare bones volume indicator. Okay, so the other one is, another question is, if you're in a bullish trade, for example, and price starts to pull back, how do you know when to exit or just hold the trade? So there are a couple of ways that couple of things I do when I'm looking for that. For example, let's see, pullbacks. This one doesn't have too many pullbacks. Here. So here, for example, price is, we enter the trade, price holds above our entry and starts to move up. So here price is going sideways, right? Starting to pull back. So how do you decide whether this is just a pullback or it's an actual valid place to exit the trade? So this is what I would do. I would draw my support and resistance levels like this. I like to draw these all the time. I have, when I'm on my chart, so you're always looking at your support, internal support and resistance levels. There are a lot of different names for it. You can call them internal support and resistance levels, fractals, whatever you want to call them. It's the same thing. They're just support and resistance areas. So I'm always looking for how price is reacting. So if you take a look here, this is your previous support and resistance. See, this is where exactly where price tested before it moved up higher. So as long as the price stays above this level, we are okay, right? And then price starts to move up. And next one here is, as long as price stays above this support and resistance, this is a high, this is swing high. So as long as price holds above the support and resistance level, you're okay. So you don't necessarily need to exit the trade. You can wait for it to bring it here and then go up. So as long as it stays, see, this one is another support and resistance area right here on the pin here. If it stays higher, it's okay. So there are some of the, these are some of the ways to manage the trade. Or another thing you can do is just keep moving your stop with the trade. So you enter the trade here. Once the trade starts to move like this, right, you can put your stop on the other side of this candle here, this big green candle. Once the price moves up higher with this candle, you can put it below this, right? So now you are on the other side of the support and resistance. So once it starts to move up, so like this green candle breaks out, you can move it below here, and you can just leave it, let the trade run. And once you have this green candle here, you can move it here. So as you can see, this is where you would get stopped out, right? But you're getting stopped out with profit. So you still have all this profit in your trade. So you get stopped out, you let the market stop you out with a profit. So that's another way to manage the trade. It just depends on whether you're sitting there watching your chart, or you can just do this, just, you know, say, okay, this is my important support and resistance area, this is my important support and resistance area, I'm going to take my exit before it gets to this. Like, that's another way to manage the trade as well. So it really depends on how you feel comfortable in managing. But in terms of trailing the stop, just trail the stop, look for the key support and resistance levels like this, right, this one here, and put your stop below it on the other side. So as the price starts to move up higher, see, this is your another support and resistance, put it down here, move it up, and at some point you'll get stopped out. Like, at some point you'll get stopped out, which is good. You get stopped out with a profit. So just goes back to trade management. Any other questions? All right, so looks like we have answered all the questions. Like I mentioned, it is a nice and easy trade setup, good, easy to recognize, easy to trade from. So I recommend just go back on your charts and practice. Okay, you're working on your trading psychology. Psychology is one of the most difficult things in trading. A lot of times we don't make profit in trades, not because you don't know how to identify the trade setups. A lot of times it's just because we get too euphoric. We increase our trade size, or we get too fearful. So we get out of the trades early, or we don't get into the trades, and then we see the trade going away from us, and we finally get the courage and enter when it's too late. So things like that come into play all the time. Yeah, so and that happens. You know what, like, even think about athletes. when they play, even if it's Michael Jordan, for example, playing basketball, he misses 50. I remember I was looking into his biography, and he said he used to miss 50% of his free throws. There's no defender, and he would still miss 50%. And that's not because he did not know how to shoot a basket. It's just that, when you're under pressure, the mind comes into play as well. So don't beat yourself up for that kind of stuff, right? Just go with it. Trade smaller size and put some demo trades on. So you're not really losing money in that case. You're just practicing. So once you can get a good idea of where to enter, where to exit, and the only way to do that is to go back on charts. So one of the quickest way to learn is to go back on charts or use Forex Tester and test these things out. See how many times the trade went against you. See how far the trade went in your favor before you got kicked out of the trade. So some of those things will help you become more confident in your trading. All right, so perfect. So if there are no more questions, we will call it a wrap. If you would like to, again, learn some of these strategies, check out my course at tradingwithvenus.com/Forex course. I also do webinars every other week, so twice a month. I do these webinars, so you're welcome to come join me in these webinars. And again, if you go to tradingwithvenus.com, there's a webinars link in the navigation bar there. You can look at what webinars I have scheduled. I'll be scheduling some more this coming week, so there should be a bunch more taking us right into the end of the year and then into the next year. So what would you foresee for the next Tuesday American election? This is an interesting topic. Right now, we are seeing the US dollar is taking a beating because of what's going on with the elections. With that, the key event, and this is why we need to pay attention to our news feed, that changed the scenery for U.S. election was FBI saying they're investigating some emails that they found from one of, I think, somehow related to Hillary Clinton. It was her aide's husband's laptop or something like that. Anyway, FBI came out and made the announcement saying they are investigating these emails, and then Hillary could still be in trouble. That just changed the tide for the election. So everything was very, very bullish for the US dollar. Market was expecting Hillary to win because at that point, Donald Trump had completely just been he was just getting awful, just with some of the things that were coming out of his mouth. He was just getting some awful kind of feedback from all parties. But when FBI came and said that they're going to investigate these emails, that just changed everything. And from there on, it introduced a lot of volatility in the market. And the reason for that is because market wants to. So market doesn't really care. Well, I guess it does care. So between Hillary and Donald Trump, they don't really like one more than the other. Market would prefer to have Hillary Clinton win the election just because they know what her policies are. They know who she is. She's been in politics for a long time. So they kind of know who she is. So they can see how her her election, after the election, how she would be in terms of her policies. Whereas with Donald Trump, he doesn't have any political experience. He hasn't been anywhere in terms of our political system. So because of that, he's a wild card. And some of the things that he says and he's talking about, he's just basically sending immigrants out of the country and things like that. Just some of the things that he's saying, market doesn't quite like because it creates volatility. And that's why they're not for Donald Trump to win this election, just regardless of what their political agenda is. It's just that Donald Trump is a wild card, and markets don't like wild cards. They would take a bad leader that they know as opposed to a good leader that they don't know. So that will create market volatility. So coming into the election, we can expect to see a lot of volatility in the market, and then once things kind of die down, the election is over, then it will depend on what they're doing with the interest rate in terms of the US dollar. But Hillary winning the election is more positive for the market at this point than Donald Trump. And because all the polls are coming out, and some of them have given Donald Trump a lead, some of them are saying he's very close in terms of right behind Hillary, which means when the people do go to vote, it could go either way. So all these polls coming out, we saw the same thing before Brexit. All these polls coming out are really just messing things up. And every time there's a poll that puts Donald Trump ahead of Hillary, the market, US dollar takes a hit. Every time it's the other way around, it kind of recovers a little bit. But for now, I would recommend just watch it. On Tuesday is not a good day to really trade. So first part of next week. But there are a lot of, I think FX Street or some of those people are doing live sessions. So that's, you could check it out. It'll be interesting. It'll be interesting to watch. When at time of Brexit, it was a good trading opportunity. Again, maybe do this in a demo trade. You don't want to lose your real money on this. As the results started coming in, it started showing which way the lean was. So I traded Brexit. It was actually quite successful because once the results started coming in, a lot of the leave vote was coming out, and because of that, the market started moving lower and lower and lower, and I just added to my position. It was nice. Actually, my husband and I, we were both trading. It was good. And you could do the same. So once you see which way the results are coming out, you can start playing around with it. But till then, we do expect a lot of volatility in the market, so be mindful of that going into it. In terms of my preferred currencies to trade, it depends. So right now, because of the volatility in the market, the US dollar may not be the best one to trade, so you may want to focus on something else. But generally, I tend to trade the euro, the pound against the US dollar, just because there is a lot of, we do need volatility in the market. We do need the price to move. And normally there is good amount of volatility. There is good amount of volume in those pairs. So I tend to trade those more. So if you have like some weird kind of pair, one of these crosses like I don't know, ruble or whatever, the spread is quite large. So I tend to stay away from them and stick more to the majors or the crosses like euro crosses or the pound crosses. So those are some of the ones that you can trade. But I stick to the majors just because there's more volume in those and we can make the money quicker. Okay, perfect. So I think that's the end of the questions here. And so let's call it a wrap. And I will see you next time then. Enjoy the rest of your day.